All right, so let's get started with the show then. It's a full house in our studio today, and incidentally, it's also ladies special today, Nigel, on your birthday. So let's welcome our two guests. We have with us Feroze Azeez of Anand Rathi Financial Services, who's going to answer all our personal finance queries, and Lancelot Dacuna of ITI Wealth Management will be answering all the stock queries. Good afternoon, gentlemen. Thanks much for dropping by to the studio this afternoon. Let's get started. I think we have our first SMS already.
Yeah, we have our first SMS is coming, and Kritika has written to us from Ahmedabad. She earns nearly around 70,000 rupees per month and wants investment suggestions for a good portfolio. All right, so it's a pretty open-ended question. Feroze, how will you help Kritika? 70,000 is what she earns per month. She wants to know where else she should put her money.
Kritika earns about 70,000 rupees a month. I assume that there would be reasonable monthly disposable surpluses, which I think you should, in a very disciplined fashion, invest. I think the thought of investment is very, very important, and that you've already taken a decision of actually investing. So I think you should set aside all your surpluses to invest in your portfolio on a recurring basis, because you don't have a larger corpus accumulated already. So your investment and your accumulation should go hand in hand. So an SIP would be the best strategy for her. I think in the SIP category, as long as you have your goals written down, irrespective, I think I'll give you an asset allocation looking at the contemporary external factor. You should look at 70% of your money getting into equity and 30 going into debt, for the fact that equities is what you need to be overweight on, especially for goals which are longer time frames. So I think on the equity category, I will recommend two kinds of funds. One is the large cap fund, that is another set of funds which are called the mid cap funds. So on the large cap category, an SBI blue chip could be a very, very good fund looking at the next 2 years. On the mid cap category, you can look at two funds, which is HDFC mid cap and Religare mid and small cap. I think both these funds are poised very well to actually deliver. On the debt category, which is the last one, 30% of your money should go into HDFC corporate bond fund and Templeton corporate bond fund. So that's what I would say.
Feroze, what about gold? No place for gold?
Absolutely no place for gold. It's a stepson as far as investment is concerned for the next couple of years.
All right, Kritika, then I think you'll have to not look at gold, which is going to be quite difficult, Sumera.
Oh, not entirely difficult. But anyway, we have another caller with us. We have another query that has come in from Vidhi Mathur, who's written to us from Mumbai. She wants to invest 1,000 rupees in a retirement plan and wants to know if the GOI new pension system is a good retirement plan. Feroze, I don't know. I'm not very big on retirement plans. Would you advise that this money just be, allocated towards a retirement fund?
Yeah. Absolutely. I think retirement is a very, very large goal in somebody's life, because you will have to live on that money for long periods of time, because at least 20-25 years after you retire, you need to live on that. So you need to start saving for retirement. So I think it's a big goal, and I think people should take that seriously. Now comes to the specific query of Vidhi, which actually means getting into a Government of India new pension scheme, which was launched a couple of years back in terms of good retirement retirement compass collection place. So I personally think the NPS is a very good method to actually participate in equity, get the best fund management at the least costs possible, because if you look at the best fund managers actually being a part of it, and their costs vis-a-vis a mutual fund would be as low as 0.02%, which is 1/100th the cost you would pay to get the same fund manager if you went directly in the form of a mutual fund. So it's a very, very good investment, but there are some drawbacks of it, that you can't withdraw your money very freely up to the age of 60, and you on the tier 1 account. So tier 1 account is the mandatory account, and you can't actually get rid of it in terms of exits. So exits are not very friendly. Even when it comes to exit at the end of 60 years, when you have reached the age of 60, you have to mandatorily move 40% of that money into an annuity scheme, which gives you a regular income to fulfill that retirement goal. The other 60% can come out, and that gets taxed. So one which is the illiquidity aspect is not a very good thing, but otherwise it's a very, very good investment. So I think you should choose the NPS scheme for your retirement corpus collection. It's very efficient.
All right, then I have some planning to do as well, and maybe I'll use some of that advice, Feroze. But the Nifty is not doing much. Let's slip into a short break. On the other side, we have a query on Ashok Leland, and also we'll take up some PF questions. Stay tuned. But our next caller is in. So Ramila Sharma writes to us from Delhi, in fact, and she wants to invest through SIPs in mutual funds. She wants some guidance. Feroze, what guidance are you going to give her?
Yeah, certainly. Ramila. I think SIP, as we've spoken in the earlier part of the show, is a very, very good method to invest, and actually gives you no fear kind of an investment, because you're investing at staggered fashions, and equity markets volatility gets soothed for the fact that you're not investing all your money at once. So it's definitely a very good method. So my advice to you on the SIP bit would be that you should not spread your money too thin in the SIP category. If you have about 10,000 rupees to invest, I think you should not take more than 3 funds, 2 equity and 1 debt. If you have more money to invest, about 20,000 rupees, then you should restrict yourself to 4 funds, because portfolios which I would have seen, the lesser the number of funds, and consolidated portfolios have done significantly better than those ones which have actually been spread really well. So to my mind, I think on the large cap category, you can look at the Birla Frontline Equity Fund, which is a very, very good fund, all from a futuristic perspective, not just from a past performance standpoint. On the mid cap category, you should look at the ICICI Discovery Fund, which buys stocks which are undervalued today and does not just go with the stocks which have the momentum. So valuation as a philosophy is a very, very good philosophy to follow. And the last one being the HDFC Corporate Bond Fund. I think that'll be the advice. Sure.
All right, I hope you got that advice. Feroze, Lancelot, thank you so much for coming to our studio today and answering our viewers' queries. We have to wrap up on your stocks, but do stay tuned. Closing bell will take you through all the action.